Hello traders, let me hope you guys are doing fine. So guys, again, I want us to understand the concept, how this market makers move the market. Okay, so again, this is how you should be reading the market. So for example, if the market gives us that is our support, okay, and then the market has given us our resistance. Okay, now for example, if we are in having a buy, so for example, this is what we are having. Okay, now the market does this. Okay, the market goes at the resistance, gets rejected, comes back and sweeps this liquidity here. Okay, then goes at this area. Okay, and then comes back at support, for example, and then comes and breaks this area. So now listen to me, you have to understand one thing. The market is very confusing. Okay, so now if you're seeing this back idea, forget about it. Look at the last move. Okay, so the market broke this area. Okay, now when the market was breaking this area, where was the initial area? The market came from this area to go break this area. So now what do you do? If the market does this, this is what you should be doing. You should be waiting for your entry at this last area, not exactly at the order block, at the last area the market before the market made the move to break up. This is where the market started from. So you should be waiting for an entry at this area, okay, to go to the upside. So if the market goes up and doesn't come back, that is not a trade. If you want to get a high quality trade, the market will come on top of support. It will play around. Why does it do this? Because it wants to fake people that they should come and buy so that it can go up. But again, it's going to break to the downside. Okay, so if you break to the downside, it can come around here before reaching this area. Then it hits a big candle to this area, taps around, and then this should be your entry. Then it goes up and continues up. So again, this is how you should be entering a trade. Okay, you wait for the market to break an area. Okay, this is mean that the market has changed, has broken the last high. Now wait here. This is the last area where the market started the move at. This is where you should be getting your entry at. Then you target the next area here or even above it. Okay, so if the market breaks an area, that's an indication that we are going above. If it comes on top of support, don't enter, because again, the market didn't start from here. It does this because it knows that traders love executing at order blocks. If you enter at this area, it's gonna continue to the downside and it's gonna take you out. Okay, so you have to wait for the market to come back inside and then you execute. So again, I'm going to show you some example of the same trade that happened just like that. Okay, the same trade that happened just like that this past week. Okay, so when was that date? Let me look at it here. When was it? That was a beautiful day, very beautiful. What was it this day? I don't remember well, but again, let me see which day was that. Let me see this day. Okay, let me see something. So now, yes, it was this day. So now look at what happened, guys. Okay, now we are having two resistance. Okay, we are having this first resistance over here, and then we have also this is how the market opened. Okay, now we can't execute a trade if the market hasn't gone there. If we are in between, this is our support. Okay, if the market goes and breaks, we have to wait for it come back at this area before we buy. So what are we going to do? We wait for the market. So let me try to play and you guys see what happened. The market did this. Okay, the market went to this first order block, got rejected, came past this last swing low. Okay, got rejected, and then this is what the market is doing. So the market hasn't broken an area, so the market did that, the market broke that area. So now if the market breaks this area, okay, it came from here to break this area. Remember, this is our support. Okay, for example, let me turn to a smaller time frame, maybe you guys can see very well. So now guys, ask yourself one thing: where did the market come from to be able to break that area? The market came from this area. The market came from here to go break that area. So if it breaks the area, most people would have bought from here at the support. Don't do that. Wait for the market to come back inside the order block. That is where you should be buying from to continue with the market to the upside. So again, this is what the market did. The market came, you see, when the market came, did this, arrived at this area, okay, then some buyer came in, then you can maybe wait for more buyers to come in to get good buyers. If okay, that the other buyers also came in, and then you can also wait. Now real buyers have come into the market. Now this is what you do. You execute that trade like that, okay, your stop loss just at that area, okay, and then you target your risk reward of 1 to 2, 1 to 3. I love targeting 1 to 4 most of the time, okay. That is 1 to 4 risk to reward. This is the trade that I took last week. This is what happened. Boom, 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 boom. The market tried to go up, then rejected. Then the market went above and broke the order block. So this is how you should be executing perfect trade, perfect entry. This is how you should be trading. So again, most traders who haven't learned how the market moves, most traders will be waiting for the market to come here at the order block, but it won't come at this area. It will stop here, because again, if the market breaks an area, it always comes back at that area where it started. That is where the initial move is, okay. That is where you should be waiting for an entry to continue to the upside. So don't jump into a trade over here or over here. It will come out, take you, wait for the market where it started from. That is where you should be getting your entry at.